Hi there everyone and welcome to Buy Now Sell Now Weekend with me Avan Dabaj. Today on the show we've got lots lined up. In fact, we will be answering all of your stock queries as well as filling you in with a Portfolio Advisor segment. Lots lined up then today on the show, so let's get straight to business. We've got viewer queries lined up today on MRF. We'll be discussing the outlook on Venkys India as well as Airtel. Joining in today on the show, we have Vikas Sethi, Managing Director, Sethi Finmart, on the fundamentals and on technicals. Rajesh Palvia is Head Technical and Derivative Research at Axis Securities, joining in on the show. Well, great to have you on board, and let's get started with our first query of the day. And this one comes in on MRF. Well, it's a question which has been sent in to us from Dr. Rajiv Sharma. He hails from Hyderabad. He's got 20 shares of MRF bought at a price of 25,000 rupees. Wants to know whether he should hold, sell or even buy some more. What's the outlook, Vikas, based on the fundamentals?
First I would like to congratulate the investor for having bought MRF at such a low price. He's already made 200% gains on the stock. But I think even at these prices, this is a stock which should be held on to. It's a leading tire manufacturer, and with the kind of activity being witnessed in the tire sector, particularly after the natural rubber prices have hit a new low, I think the sector should do well. And to add to that, the auto sector is also growing very rapidly, and the impact of which would be positively felt on all these tire stocks. So I maintain a hold on MRF, and my 1 year target would be 90,000 rupees on the same.
Okay, that's the outlook coming in. Compliments to you, really making some healthy gains on MRF. You've really bought in at the right price, and it's currently staring at 75,000 thereabouts. So good going. So based on the technicals, what exactly would be your assessment? Do you believe, Rajesh, that he should continue to hold on to the stock? Should he perhaps book partial profits? What's the outlook now?
Yeah, definitely, Avan. My recommendation would be also to hold the stock. If you look at the longer term time frame, stock is bullish on all the time frame, and looking at the recent consolidation, I think stock has formed a very strong base at around 72,000 or 70,000 kind of level. So I feel now that once the stocks manages to cross this 78,000 on the higher side, it will resume its uptrend, and I think on the higher side 85,000 could be the next target for the stock on the higher side. So my advice would be to hold on the stock. Even on the decline also towards 72,000 or 70,000 is a buying opportunity in the stock for the longer term perspective.
Okay, definitely look to stay invested. That's the outlook coming in. It's a consensus hold on the tire stock, that is MRF, and congratulations on that stellar investment. The bullish structure is visible on the long-term charts, and it's a buy on dips as well. Next up, we have a query on Venkys, and this one has been sent in from Nagarjuna Devasani in Bengaluru. He's bought 137 shares of Venkys India. Just pull up that stock. He's saying, suggestive in the medium term, it will reach my buy price, or should I exit with losses? Can I hold it for another 1 year or to book profits? What really is the outlook for Venkys India, and does it make sense for him to remain invested or completely book out? Well, the company has been in focus of late. Strong, impressive financial record. The performance has been fairly good as well for Venkys. In terms of results, they managed to ramp up their bottom line as well. Earnings have come in above what the street was expecting, and the analyst view is that they can maintain an adequate level of cash, meet the to meet all their expansion plans. But unfortunately here, I think our investors losing out quite significantly. Purchased it at 3,800. Vikas, what does one do? He's saying, should I hold it for another 1 year to book profits? What do you think he should do?
Unfortunately, the investor has bought it at a very high price. The stock has corrected heavily, substantially from those levels. This stock was also put under the ASM category by the stock exchanges recently, and ever since then we have seen a massive fall in the stock, in line with other stocks which have been put in the same category. But then this company is fundamentally a good company, has a pretty strong balance sheet, and I think the investor should hold on to the stock. At the current levels, the valuations have become pretty reasonable, and I feel in a year's time he could get back to levels of 3,500. So my recommendation would be to hold on to the stock.
Okay, so stay invested in the stock. Vikas believes that there is potential for it to perhaps, come to the levels at which you've bought it at. You can look to exit around 3,000 to 3,200. Let's understand what your outlook is then based on the chart patterns. Perhaps Rajesh, Vikas's views that you can hold on actually with a target of 3,500. Definitely bought it at the higher end. What does one do now?
Yeah, if you look at the pattern, the stock corrected significantly from the level of 4700 level, and now stock is trading near to its important support area of 2450, and some sort of buying interest has been witnessed at the lower level around 2450 kind of level. But even if you look at the short to medium term chart perspective, that there is a breakdown happen on the short to medium term chart pattern, and now stock is trading below all its important moving averages. So I feel yes, some sort of pullback action can be witnessed in the stock, but on the higher side, I would advise one should exit around 3000 or 3200 kind of level, where again stock is likely to meet the resistance or supply pressure on the higher side. So my recommendation would be to hold for certain pullback action towards 3000 and 3200 level, where he should exit his positions.
There you have it. That's the outlook coming in on a Venkys India and how exactly you should be approaching it. Let's move on. Then we have another query on a third query from Sudhir Kumar, and this is on Bharti Airtel. He's bought 100 shares of Bharti Airtel at 455. Should he hold or sell? Short to medium term time horizon. Well, certainly you've got Bharti, which has been hit quite badly on the back of Reliance Jio's entry. A lot of these companies within the telecom space, Vikas, have had it fairly rough. Of course, those who stand to benefit are the likes of you and me, the customers, given the new offers that are continually coming on board. What exactly is it that he should do with a Bharti Airtel at 455 is where he purchased it?
Yeah, my recommendation would be to sell, book his losses and switch to some other good quality stock. I think telecom as a sector has been a laggard, and particularly in view of the stiff competition which has been given by Reliance Jio, and I think it will take a while before things start improving for the telecom sector. So I would recommend him to sell, and I would advise him to switch to a stock like an ITC, which is again a large cap, and it has also been beaten down, but I think the prospects look pretty good with the kind of good monsoon which we've had and the recovery being witnessed in the rural economy. I think ITC would do well. So my advice would be to switch to an ITC.
That's the call coming in. A better option would be for you to switch. ITC is a better bet that you can put your money in. A thumbs up there from Vikas. Rajesh, what does one do, in the telecom space with the likes of a Bharti Airtel, given the kind of returns or lack of it that it's seen in the last, 3 months or 6 months or so? The stock has eroded quite a bit of market cap. What would you advise?
Yeah, absolutely. If you look at the performance of Bharti, it was underperforming all the sectors, and the stock is in downtrend. And even if you look at the short to medium term chart, the stock is in trading below all its important moving averages. So I feel upside is limited for the stock. If he can average it out at the lower level and he can bring down its average buy price at the lower level, so around 340 is the important support area for the Bharti at the lower level. So if he wants to stick to the stock and if he wants to hold the stock, then he should average it out at the lower level around 340 level, but he should keep strict stop loss of 320. If you look at the longer term time frame, the 400, 410, 20 kind of level is a tough hurdle for the stock for any kind of upside if we look at the recent past. So I feel that from the current level also, if some downside comes towards 350 or 340 level, he can average it out with stop loss of 320. In the pullback action, if stock reaches towards 400, 410 level, is a exit opportunity for the stock on the higher side.
Watch out for some of those important levels. An upside target of about 410 to 420. Do remember to keep stop loss at 320. Tell you what, on that note, we'll take a quick break right here on the show. Stay with us on the... Welcome back. This is Buy Now, Sell Now Weekend. Let's take it straight to our portfolio advisor segment. And today, Mr. Balaji, it's your lucky day. We're addressing your portfolio. Well, let's just run you through his profile. He's 43 years of age. He's an IT professional. He's got a long-term time horizon and a whole host of stocks in his portfolio. Let's nail it down to the first three names. He's holding ACC at 1670. He's got Apollo Microsys at about 316 rupees. Arvind is in the portfolio, 50 shares at 430. Moving right on, Aurobindo at 590. BEL features on the list, and he's also got GAIL in the portfolio at a level of 327. To hear Auto, Zen and Hero Moto, he's got that stock at 3,689. Hindalco from the metals basket, Idea Cellular at 94. Bharti Infratel from the large caps at 345. And two banks in the form of Kotak Bank at 1,092 and Karnataka Bank at 158. So Vikas, let's get in your expert advice. How should he position himself? What is the outlook? Start off with the first three stocks. ACC, do you think that it merits a hold? Do you like Apollo Microsys? And what's the outlook on Arvind?
Yeah, one. As far as ACC is concerned, most of the cement stocks have hit their 52-week lows recently. That has more to do with the normal monsoon which we've had, and which has led to a halting of construction activity, and that's why cement companies are not doing well. But I think since he is a long-term investor, I think this is the right time to start accumulating also cement stocks, because I feel with the government's focus on infrastructure, roads and housing, cement sector would do well. So my advice to him would be to hold on to the stock. My targets are 1,600 rupees in a year. The second stock is Apollo Microsystem. If you remember, it's a recent listing. The IPO came in the month of January. What a tremendous response the IPO received. It was oversubscribed around 248 times. It had a fabulous listing. It went up 75% on day one. But ever since then, the stock has corrected sharply. It has come down to its lows of 52-week, which was around 175 levels where it trades right now. The investor is sitting on losses, but I think he should continue to hold on to the stock. I think he should be able to see price levels of 275 in a year. And the third stock, Arvind, again a solid company, fundamentally a very good stock. The demerger talks, demerger has already been approved. It is going to demerge its branded apparel business and its engineering division. And I think some of the parts valuation would be much higher than the current levels. So I think he should continue to hold on to the stock. My targets are 500 rupees in a year.
Okay, I hope you've taken note. That's the advice coming in on the first three stocks. Well, let's move right on and understand what one should do with Aurobindo. Lots of news has been going on in the pharma space. Are things finally seeing some signs of recovery? Do you like the prospects of BEL and GAIL India, given the way spot LNG prices are moving and the kind of brokerage reports we've seen at 327, which our investors bought it at? Is it a compelling hold or not?
Aurobindo looks to be a good bet. Most of the pharma stocks have recently done well ever since some positive news in the form of approvals from US FDA has started trickling in. We've seen that in names like Sun Pharma, Lupin and Dr. Reddy. I think Aurobindo Pharma is also a good bet. Trades at pretty reasonable valuations, and the investor has bought it at a right level. So I would recommend him to hold on to this stock. My targets are 750 rupees in a year. As far as Bharat Electronics is concerned, good company. Government's focus on defense and Make in India would certainly augur well for a company like Bharat Electronics. Has been beaten down of late, and at the current levels, it seems to be a hold. So I would recommend a hold with a target of 150 rupees in a year. And the third stock, GAIL, again, fundamentally a good company, and most of the gas stocks are doing well. So I would even maintain a hold on GAIL with a target of 400 rupees in a year.
Okay, take note of those levels. It's important to watch out for on some of those stocks. Moving right on, Hero Moto, how are you looking at the overall auto space? Things are looking fairly buoyant here. Hindalco at 257, and do you believe that Idea Cellular, given the kind of pressure we've been seeing in the telecom space as a whole, merits a hold, or are there better options?
Yeah, as far as Hero MotoCorp is concerned, a very good stock, leading two-wheeler company, and it would be a major beneficiary of the good monsoon which we are witnessing, which would lead to a recovery in the rural economy, and this company's fortunes are certainly dependent on the rural economy. So I would maintain a hold on Hero MotoCorp with a target of 4,200 in a year. Hindalco, again, good stock, but of late we've been witnessing carnage in metal stocks because of the US-China trade war, which could have its impact on metal prices, and that's led to severe correction in all these metal stocks. But at the current levels, Hindalco again looks to be a good bet. He's bought it at a high price. He should continue to hold on, and my targets are 300 rupees in a year. And finally, Idea, again, telecom stock, as was my opinion when I talked about Bharti Airtel. I do not like the sector. There are lots of problems as far as this sector is concerned. So I would maintain a sell on Idea Cellular. I would advise him to book his losses. And my recommendation would be to switch to a stock like an India Cement from the cement space. The details I will discuss when I talk about my long-term wealth creation ideas.
Okay, I hope you've taken note. That's a bit of a switch that you'd have to do with Idea Cellular. Bharti Infratel, what's the case here at 345? Kotak Bank seems to be a fairly sound name in the portfolio. Do you think that it should continue to stay? And what's the outlook on the fundamentals of Karnataka Bank? Should he stay invested?
Again, one Bharti Infratel has to do with telecom, which I do not like. So I would maintain a sell on Bharti Infratel. And I would recommend a switch to an auto component stock like a Jamna Auto, which looks pretty good at the current levels of around 89, 90 rupees. I have a target of 150 rupees on that. The second stock, Kotak Bank, is among the leading private sector banks with pretty strong fundamentals, pretty good asset quality when you compare it with other banks in the space. So I would maintain a hold on Kotak with a target of 1600 rupees. And finally, Karnataka Bank, also a small sized bank, but good bank, pretty stable asset quality. And this bank is likely a candidate for a takeover or an acquisition. So as and when that comes, it could shoot. So I would recommend a hold, although he's bought it at a higher price, but I would still maintain a hold. And my targets are 160 rupees on the stock in a year.
Okay, that's the outlook coming in on your entire portfolio, chops and changes, and the way that you can benefit the most and stand to make more money. I hope, Mr. Balaji, we were able to help you out, but do remember that this is only a model portfolio. Please consult your individual investment advisor before making any investment decisions. Let's talk a little bit about the markets then in the week gone by. We ended at about 10,821 in Friday's session. Rajesh, would just like to get in some thoughts as to what the direction of the market is. Word on the street is that consolidation is the name of the game.
Yeah, if you look at the last 5-6 trading session move, stock market was consolidating in range of 10,700 to 800 kind of range. But in today's trading session, we have seen market index managed to give the breakout of 10,800 level on the closing basis. So I feel even if you look at the derivative data, also lot of action has been witnessed on the 10,000 put writing aggressively seen in the today's trade, as well as the unwinding action was seen on the 10,800 call option. So which is clearly indicating that now if market stay above 10,800 level, so most likely market would move towards 10,900, which is the next target for the near term basis ahead of this expiry. So I feel we'll see bullish trading sessions for next 1 or 2 trading session to be there, and the 10,900, 10,950 could be the target on the higher side. One should keep a stop loss of 10,700 for their position which they are holding at the current juncture.
Okay, Vikas, let's understand how you're reading into the kind of volatility that we've experienced, particularly for the broader end of the market. A lot of stocks have had it very rough. Do you think that now your advice to investors would be that it needs to be very stock specific, only quality names will bear the brunt of the market volatility?
Yeah, true. The markets are in a very volatile phase. We are getting regularly some kind of negative international news. It is sometimes in the form of US-China trade wars, then the rate hike in the US, the Fed rate going up. So these are all keeping the markets pretty volatile. But as far as our markets are concerned, I think the domestic economy is doing well. Corporate results for this quarter should be pretty good. And monsoon has been normal. So I'm not worried about markets from a medium to long term point of view. So I would advise investors to pick and choose good quality names from large caps and small caps, or mid caps, which have corrected sharply over the past month or so. So my advice to investors would be to start buying into fundamentally sound mid caps as well as large caps, and hold them for a year when I think they would get substantial returns from the current levels.
Okay, so quality is the name of the game. Let's find out then, Vikas, where is it that you're placing your bets? What are your top wealth creation ideas?
Yeah, I've chosen 3 stocks today. Actually, since the markets have done very badly, there are more stocks which could be bought into. The first idea is an India Cement, which I discussed when I was talking about the portfolio of the investor. It's a leading company from South India. The government's focus on infrastructure, roads, construction, housing for all by 2022. That is all which is auguring well for cement sector as a whole. I think once monsoon gets over and the rainy season is out, I think construction activities would start and cement companies would start seeing pretty good demand. And the best part about India Cement is that it trades at pretty attractive valuation. The stock has been beaten down badly. It had seen highs of 220 and today it quotes around 110 rupees. I think with the kind of valuations at which some deals have happened of late, be it JP Cement or Binani Cement, I think the stock looks pretty attractive at the current levels. I would recommend a buy at the current levels with a target of 175 rupees in a year. The second stock is an auto component stock. The name of the company is Jamna Auto. It's India's largest and the world's second largest manufacturer of leaf springs, which finds application in commercial vehicles. This company has strategically located 9 manufacturing facilities throughout India. It caters to leading commercial vehicle manufacturers like Ashok Leyland, Tata Motors, M&M, Volvo, etc. The company has solid fundamentals and it's riding on the boom in the commercial on the pickup in commercial vehicles, and I think the fundamentals are pretty solid. Balance sheet is quite good, so I would recommend a buy at the current levels of around 88-90 rupees. My targets are 150 rupees on the stock. And my third and final idea today would be a stock which has again been beaten down badly. It's a government-owned company. The name of the stock is HUDCO. It's a housing finance company which mainly specializing in lending to institutions. It's a good name. It would also be a key beneficiary of the government's focus on housing, particularly affordable housing. Recently also the government had done some announcement with regard to affordable housing by increasing the carpet area required to be made for affordable housing, and then it enjoys pretty high credit rating. It has pretty low cost of funds and stable asset quality. I see tremendous growth opportunities for a company like HUDCO, and the best part is the valuations are very attractive when you compare it with its peers. So I would recommend a buy at the current levels of around 56. My targets are 85 rupees in a year.
That's those wealth creation ideas. Rajesh, let's understand what exactly you're betting on in this market.
Yeah, my first buy pick would be Mahindra CIE. If you look at the structure of Mahindra CIE, in the last 4 months, stock has given the breakout of its long consolidation of 200 to 250 was the consolidation range, and it has managed to give the breakout of that consolidation, and W-shaped formation has been there on the daily chart, and the pattern suggests that the upside target could be around 290 to 300 in the near term to short term basis. So my recommendation would be to buy Mahindra CIE at the current level. Even if any declines comes towards 255, 258 is the buying opportunity with stop loss of 250. My target would be 290 to 300 on the higher side for short term trading point of view. And the second stock is from the pharma pack. If you look at the whole pharma sector, we have seen good buying interest in the last 2-3 week kind of time frame in the whole pharma pack, and now all the stocks are consolidating at the higher level. From the pharma pack, I have selected this Glenmark Pharma. If you look at the structure of Glenmark Pharma, it has managed to give breakout of 588 on the daily chart. Even if you look at the weekly chart also, the stock is now starting the forming this higher top higher bottom formation. So I feel that stock will continue its rally towards 640 to 650 in the near term to short term basis. So one can keep stop loss of 580 for upside target of 650. And third pick is Bajaj Holding. If you look at the pattern of Bajaj Holding, it has given the breakout of 7 to 8 month consolidation mode at around 3020 level. Now stock is holding above this breakout level. And looking at the chart pattern, I feel that stock should move towards 3300 to 3350 level in the short term basis. So one can buy at the current level also. Even some decline comes towards 3125 is again buying opportunity. One should keep stop loss of 3065 for upside target of 3300 to 3350 level on the higher side for Bajaj Holding.
I hope you've taken note of all the advice. Thanks so much, Rajesh, as well as Vikas, for joining in today on the show. With that, it's a wrap. Thanks for watching.